Okay, let's unpack this. We are embarking on a deep dive into a fascinating corner of the global economy today, the manual assembly tools market.
Yeah, it might sound, incredibly specific manual tools, but think about them.
Right.
These are the screwdrivers, the wrenches, the pliers,
Yeah.
the fundamental tools that power hands-on work absolutely everywhere.
From massive industrial assembly lines to, well, DIY projects in your garage.
Exactly. They cut across countless industries, countless
Well,
activities globally.
and our insights today, they come directly from a stack of recent data and projections. This is compiled by Cognitive Market Research.
Right. And our mission, really, in this deep dive is to take their numbers, their analysis, and kind of distill it down.
Mm.
We want to understand the current state and, the future trajectory of this market worldwide,
Mm.
looking at their figures from 2021, their projections for 2025, and then forecasts stretching way out to 2033.
So we're pulling out the most important nuggets for you, the listener, so you can get quickly informed on what's happening with this, well, essential, maybe often overlooked global market.
And the source reveals some surprisingly robust patterns of growth. It's quite interesting.
So where do we start? The big picture.
Yeah, let's start there. According to the source, the global manual assembly tools market back in 2021 was valued at $13.89925 billion.
Wow, almost $14 billion for manual tools. I mean, that feels pretty significant for something so sort of fundamental to human work.
It absolutely is. And looking ahead, the source projects this figure to rise to over $16.6 billion by just 2025.
Okay, so that's the near term. And looking further out, what does the long-range forecast from Cognitive Market Research show?
Well, by 2033, they forecast the market reaching, an impressive $23.832 billion.
23 billion.
Yeah. And this represents a global compound annual growth rate, or CAGR, of 4.6% over that period.
Okay, 4.6%. So maybe not explosive growth, but certainly consistent, steady expansion globally.
Exactly. Consistent and steady.
That tells us the market as a whole is expanding, right? But the source really shines a light on where that growth is concentrated. It
Right.
drills down region by region. Let's transition to that regional breakdown.
Right. That's where you see the nuances. Starting with North America, the source indicates this region is a significant contributor. And it's growing slightly faster than the global average, actually.
Interesting.
They forecast the North American market will reach $7.762 billion by 2033. That represents a regional CAGR of 4.913%.
Almost 5% then. And looking at the countries within North America, the source highlights, I assume the U.S. is dominant.
Oh, absolutely. The United States is naturally the largest market. It's projected to hit over $5.4 billion by 2033. Canada is also a substantial market, though the course shows it growing a bit slower than the regional average, around 4.35% CAGR.
Okay.
But here's where it gets really interesting in North America, according to this data. Mexico. Yeah, it shows particularly robust momentum. They forecast Mexico's market will jump significantly to $1.325 billion by 2033.
Yeah.
And its CAGR. It's 5.626%. That's the highest in the entire North American region listed here.
Over 5.6%.
Right.
Wow. Okay, that definitely suggests some strong underlying drivers specific to the Mexican market.
Yeah, it really does.
Okay, so let's shift our focus across the Atlantic now to Europe. What's the picture there?
Well, the source paints a picture of steady but somewhat more modest growth compared to North America and the global average.
Okay.
The European market is forecast to reach $5.164 billion by 2033, with a regional CGR of 3.892%, so below 4%.
Lower than North America and the global average then. And within Europe, who are the big players according to the source?
Right. Germany stands out. It's the largest market listed by the source, projected to reach $0.96 billion by 2033.
Almost $1 billion there.
Yeah. And Russia is also a significant market in the region, with a growth rate actually closer to the global average, around 4.5%. Then the source lists a number of other countries. You've got the UK, France, Italy, Spain, Sweden, Denmark, Switzerland, Luxembourg. They show varying growth rates, but many are clustered in that 3 to 4% CAGR range. It kind of aligns with the overall regional picture.
Any standouts on the lower end?
Well, Spain, for instance, shows the most modest KGR among the listed countries. That's at 3.321%.
Yeah.
And the rest of Europe category is even lower, about 2.6%.
Interesting. Okay, now let's turn our attention to Asia Pacific. You mentioned nuances, and according to the source, this is where we see some of the strongest regional growth globally, right?
Absolutely. The Asia Pacific market is forecast to surge to $6.158 billion by 2033. And it boasts the highest regional CGR in the entire report, coming in at 4.975%.
Just shy of 5%. Huge growth. And
Yeah.
looking at the countries driving that, China and Japan, I imagine?
Definitely the clear giants in the region. China is forecast to be a massive $1.735 billion market by 2033. Japan is projected to reach $1.03 billion. But what's really notable here, the source highlights Japan.
This audio was created with podcastle.ai.
But what's really notable here, the source highlights Japan actually has a slightly higher CGR than China in this forecast period.
Really? Higher than China?
Yeah, just slightly. 5.046% for Japan compared to China's 5.041%.
Ah, that's a surprising detail. What about other areas in APAC?
Well, the source also points to other significant markets like India and South Korea, showing solid growth around 4.9%, 4.7% CGR respectively. But some of the real standout growth stories, based purely on these CGR numbers, are countries like Australia. It's projected to reach $0.441 billion by 2033, but with a very strong 5.53% CGR.
Over 5.5%.
Yeah. And the category for Southeast Asia, collectively, that's another one. The source forecast said at $0.352 billion by 2033, with an impressive 5.468% CGR.
Wow. So Australia and Southeast Asia showing really high momentum.
Exactly. And Taiwan is also highlighted with a robust 5.224% CEGR. So a lot of dynamism in the APAC region, according to this data.
Okay, that's a clear picture for APAC.
Yeah.
Let's move on to South America. What does the source tell us there?
South America? The source describes a regional market forecast to reach $2.173 billion by 2033. The regional CAGR is 4.04%.
Okay, 4.04%. So that puts it slightly below the global average growth rate then.
That's right. And the source breaks this down further. Brazil, as you might expect, is the largest market, forecast to hit $0.71 billion by 2033.
Makes sense.
But Argentina is listed with a notably higher CAGR. It's 4.756%. So that suggests faster relative growth within the region compared to Brazil's 3.9%. Argentina is projected to reach almost $0.4 billion by 2033.
Interesting dynamic between Brazil and Argentina there. What about others?
Countries like Colombia, Peru, and Chile. They show more modest growth rates, largely in the 3 to 4.5% range, according to the source's numbers. Colombia is actually the lowest listed at 3.3%.
Got it. Okay, 2 more regions to cover. Let's look at the Middle East. How's that shaping up?
The Middle East. The source describes this region as rapidly expanding in the manual assembly tools market. They forecast it will reach $1.613 billion by 2033. And with a strong regional CGR of 4.854%, that puts it just slightly behind Asia-Pacific and North America in terms of growth speed. Pretty dynamic.
Almost neck and neck with North America then. And who's leading the charge there, according to the source?
Saudi Arabia. It's highlighted with the highest TGR in the region, 5.109%. Projected to reach over $500 million, $0.544 billion by 2033.
Over 5% for Saudi Arabia. Strong growth.
Very strong. And other markets like Turkey, the UAE, Egypt, and Qatar are also listed, showing solid growth rates between roughly 4.2%, 4.9%. They're all contributing to that strong regional average.
And the rest of the Middle East?
Actually, yeah, the rest of Middle East category also shows a really high CGR, just under 5% at 4.999%. So growth seems pretty broad across the region.
Okay, fascinating. Finally, let's head to Africa. What does the source say about the manual tools market there?
Right, Africa. The source indicates this market is forecast to reach $7.96 billion by 2033. So approaching that billion-dollar mark.
And the growth rate?
The regional CGR is 4.535%, so actually very close to the global average.
Okay. And within Africa, which countries does the source focus on?
It highlights Nigeria and South Africa as the largest individual markets within the continent. Though their projected KGRs are a bit below that regional average, Nigeria is around 4.1%, South Africa about 3.75%.
So slightly slower growth in the biggest economies there?
Seems so, according to this data. But here's where it gets interesting in Africa, similar to some other regions.
Yeah.
The rest of Africa category.
The collective rest.
Exactly. According to the source, that category shows the highest growth momentum for the region. It has an impressive TAGR of 5.22%, forecast to reach $80.455 billion by 2033.
Over 5.2%. So like in the Middle East, growth seems strong beyond the largest named countries.
Yeah, that seems to be a pattern emerging from the data.
Okay, so that covers all the regions. Let's try and synthesize this. What does it all mean when we pull together these findings purely from the cognitive market research source?
Well, the overall picture seems pretty clear. The global manual assembly tools market is on a path of steady expansion,
Right.
projected to increase significantly from that almost $14 billion figure back in 2021 to nearly $24 billion by 2033.
And that closing point from the source really resonates, doesn't it? That from mature economies to emerging markets, these basic tools, the ones that power hands-on work, are seeing widespread and, in some places, really accelerated growth.
Absolutely. And we just look purely at the source's data on growth rates. Asia-Pacific is the fastest growing region overall with its nearly 5% CAGR.
Followed very closely by North America.
Right. North America at 4.913%, and then the Middle East hot on its heels at 4.854%. Europe, as we saw, shows the most modest regional growth, below 4%.
And when you look at those individual countries or categories that the data highlighted for really rapid growth, the source points to these hotspots. You've got Mexico.
Yeah, Mexico, Australia, Southeast Asia as a whole, Taiwan, Saudi Arabia, Japan, slightly edging out China, and then those rest of Africa and rest of Middle East categories showing very strong CAGRs too.
So these are the areas where the demand for manual tools is accelerating the fastest, at least according to this specific report.
That's what the numbers suggest.
So what does this picture tell you, the listener? Why should you care about these numbers beyond just market figures?
Well, I think they show a persistent, widespread, and actually growing demand for manual tools across the entire globe. This isn't just about, dollar values.
Right, it's about activity.
Exactly.
Yeah.
It indicates underlying activity in really fundamental sectors like manufacturing, instruction, repair, countless other hands-on tasks. It paints a picture of an essential economic sector that, continues to thrive and expand, touching nearly every part of the world.
That wraps up our deep dive then into the data from cognitive market research on the manual assembly tools market. We've looked at the global numbers and drilled down into how different regions and countries are contributing to and shaping this growth.
So maybe a final thought to leave you with, based on this data. Considering this market is growing steadily worldwide, and it's actually accelerating in several really diverse regions, what does this widespread, consistent demand for? Well, basic manual assembly tools reveal about the fundamental nature of work. Work and creation that still relies purely on human hands, even as technology races forward. Something to ponder maybe as you look around and see the things built with these very tools. Welcome to a deep dive. Today we're getting into a market that might seem a bit old.
This audio was created with podcastle.ai.
Today we're getting into a market that might seem a bit old school, but it's actually really vital and, dynamic. Manual assembly tools.
That's right. We've been digging into a dedicated market report on this, and our aim here is to unpack some, frankly, surprising insights.
We want to show you how this, foundational market isn't just holding on in the age of automation. It's actually evolving in some pretty interesting ways.
Yeah, and it's not just about massive factories either. Think smaller workshops, field service, even your local repair place. It touches a lot more than you might initially think.
Okay, so let's dive straight into the report's findings. You'd probably assume automation is just steamrolling everything, right? But the source material, it points to some really specific, strong drivers for why this manual tools market is, not just surviving, but growing.
Absolutely. One thing the report really highlighted was custom and small-scale manufacturing. For businesses doing high-mix, low-volume stuff.
Right. Lots of different products, small batches of each.
Exactly. For them, full automation is often just too expensive, too rigid. Manual tools, they're indispensable there. You just need that adaptability.
That makes total sense. And the report really hammered home the low capital investment point too, didn't it?
Oh, definitely.
If you're a startup, a small shop, getting set up with manual tools means you skip those huge upfront costs of automated lines.
Yeah, the report had examples where this low entry barrier let new businesses, get off the ground much faster. It really does sort of level the playing field.
And that brings up precision and flexibility, right?
Yeah.
The source talked about how manual tools give you amazing control for really intricate work.
Yes, like assembling tiny electronics or working on sensitive equipment. You need that human touch, that immediate feedback that, automation often struggles to replicate.
And it's not just assembly lines now. The report spent quite a bit of time on repair, maintenance, especially field service work.
Good point. You can't exactly send a robot out to fix a washing machine in someone's house, can you? Or do complex installs out in the middle of nowhere. The report made that very clear.
Okay, but it's not all smooth sailing. The report was clear about the challenges too. The big one, obviously, is that manual work is labor-intensive.
Right. it's inherently slower, especially for high volumes. The report actually put numbers on it can be significantly slower than even basic automation for repetitive tasks.
Yeah, and ergonomics, that was a major concern highlighted in the source material. Operator fatigue, repetitive strain injuries.
Musculoskeletal issues. It really underlines the need for better tool design tools that are, easier and safer to use over a long shift. It impacts productivity, quality, everything.
And speaking of quality, inconsistency was another point the report raised. Skilled people are incredibly precise, but, well, human variability can creep in.
It can, and that's a real challenge where you need like micron level accuracy
Right.
consistently.
And we can't ignore the bigger picture, the ongoing push towards more automation, especially in those high-throughput factories. That's still a definite headwind in certain segments.
True, but then we get to the really exciting part, where the report shows the innovation happening within this market, the trends shaping its future.
Like ergonomics. That seemed huge.
Massive. We're seeing this surge in tools designed specifically for comfort, better balance, less vibration. The report links these directly to reduced fatigue and, interestingly, better consistency from operators.
So innovation right there in your hand.
Mm.
And what about the digital integration? That sounded fascinating.
Oh, it is. Think screwdrivers with little digital readouts confirming the exact torque you applied, or tools that track usage data via Bluetooth.
Wow, so the tool itself becomes a data source for quality control.
Precisely. It's about adding intelligence, improving control, and another big trend the report flagged is demand in emerging markets.
Ah, right, where manufacturing is growing rapidly.
Exactly. Places in Southeast Asia, parts of Africa, manual tools are often the go-to choice there. They're affordable, tough, easier to train people on compared to complex automation.
I also thought the hybrid tools were really interesting, the battery-assisted ones.
Yes, like those screwdrivers or ratchets where you start it manually, get that tactile feel, but then power kicks in to speed things up.
Kind of the best of both worlds.
Yeah.
Speed, but still precise control.
It's all about augmenting the human operator, making them more efficient and safer, not necessarily replacing them wholesale.
So wrapping this up, what does it all mean for you listening? Well, whether you work in a trade, deal with manufacturing, or you're just curious how industries evolve.
This deep dive really shows the manual assembly tools market is anything but static or simple.
Yeah, it's this dynamic mix, isn't it? Time-tested methods meeting modern needs, driven by ergonomics, data, and global manufacturing shifts.
It really shows that basic doesn't mean unchanging. There's a lot going on.
Definitely. And it leaves you with a thought, right? As these tools get smarter, more ergonomic, how much further can they evolve? Could a simple hand tool become a truly sophisticated instrument?
And what new skills might that demand from the people using them? Fascinating stuff to consider.
This audio was created with Podcastle.ai.